Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 24th of March 2020. And earlier we published a video entitled How We Bought Gold Today Below Spot as Prices Rise. And in that video we pointed out that equity markets have risen and so too have gold and silver prices. Now, the time of producing this video podcast, it's 17:45 GMT. So European markets have now closed, and whilst Wall Street is open, it is rising considerably. First of all, though, we thought that we would look briefly at the economic data announced today, which includes the Markit Manufacturing Flash PMI for March, which came in at 49.2, just 1.5 points lower than February's figures. However, the Markit Services Flash PMI is down strongly at 39.1, some 10.3 points lower than February. That, to be fair, is quite concerning, but understandable under the circumstances. Now, interestingly, though, new home sales for February beat market expectations by 15,000, coming in at 765,000 new homes built. So, back to equities. Most European equities closed up between 8 and 10%, with the FTSE 100 index, an index which has caused some concern, especially post-Brexit, is up 452 points today, or just over 9%, at 5,446. Naturally, these markets were already up prior to Wall Street's opening, but Wall Street has added some momentum, with the Dow Jones now up 1,569, enabling the index to surpass the psychological and, frankly, important and some may argue imperative figure of 20,000. It's currently 20,161, up some 8.4%, with the S&P 500 up 7.5% and the Nasdaq up 5.9%. So a good showing today for all of the American indices as well as Europe. Now, the dollar index, although it's down on the day by 0.5, at the current level of 101.9, it is higher than it was a few hours ago. Now, in the oil markets, Brent crude is up today, albeit by just 25 cents, at $27.28, and WTI crude stands at $23.48, up just 12 cents. One really does have to wonder how long these prices can remain at this level and the effect that it will be having on companies, particularly in the US, the shale oil companies, whose costs of manufacture or production or extraction, whichever the correct appropriate term is certainly higher than these figures as far as the barrel rate is concerned. Now, gold is currently $1,630, up $67 on the day so far, and silver too has had a good day, up 89 cents at $14.11. Again, passing a psychologically important figure, $14. Now, from a technical point of view, gold is on the verge of either a breakout or a fall. Breakout up or a fall down. And it's almost the toss of a coin as to which direction it will go. Now, whilst we're of the view that there could still be more strength in gold and should be more strength in gold, the technicals, and remember, they're not overwhelmingly prophetic, are suggesting a two-way price move is almost equally balanced at present, especially if geopolitically there appears to be some light on the horizon. Now, silver markets have truly rebounded, and frankly, If subscribers had used a service such as Bullion Vault or similar a few days ago, and most certainly last week, they would already be looking at quite attractive profits, of course depending on how much one invested, which even in this market could be sold and moved into cash, if that was the desire. Looking 6 to 12 months ahead, they would likely make even more profit on such an investment. Now, as mentioned, a pullback is quite possible from here, from a technical point of view for silver too. But as we all know, there are other factors affecting price movements currently. Now, the prospect of a $2 trillion economic stimulus package to be passed by Congress, and yesterday's announcement by the Fed to buy an unlimited number of bonds, in addition to its recent rate cuts, and loan guarantees and extended dollar swap lines, have all contributed to attempt to calm equity markets and to assuage banks' liquidity issues. This is indeed positive for gold, and even Goldman Sachs have stated today that bullion is, quote, probably at an inflection point, and it is time to buy, unquote. Now, our view, for what it's worth, is that once again, the concept of gold and silver as a monetary metal or source has moved from initially being regarded as simply a hedge to one in which investment considerations can now be attached. Only a few months ago, we pointed out that investment managers and advisors were at last considering gold as part of an overall investment portfolio. And frankly, this was something that more traditionally most tended to ignore, except those managing extremely large funds and needed gold as a currency hedge. We have little doubt that the 2020s is the decade for precious metals, as we had no doubt that prices would all but fall from the 2011 peaks. The current situation shows us that once again, precious metals, and especially gold at present, with silver eventually catching up, will once again be treated as a serious and investable investment asset class. And the past few months have highlighted this perhaps more than ever. What will be interesting to see during the course of this week, and perhaps more arguably and importantly over the course of the next few weeks, is how GDP growth and other economic statistics have been affected to the downside so far. We have little doubt that the figures will be concerning, but as we know, markets do tend to look ahead, discounting what is currently happening, and there could be a case for equities to become attractive yet again. We would not rule out at all a scenario where we see rising equity and precious metal prices together moving in unison later in the year. Not necessarily in the next couple of months, though even that is still a possibility. Meanwhile, a lesson for companies should be that the next time their or your government gives them a windfall by the form of some form of major tax break, rather than spend it on share buybacks, which in the final analysis really and truly benefits the directors and shareholders only. There might be some filtering down of benefits, but it's primarily for the benefit of directors and shareholders. Consider using these funds to liquidate debt, invest in research and development, and share a little with their staff by giving them added employment protection. It's not a lot to ask, and frankly, over the longer term, does actually make better economic sense. So to conclude, equities, gold and silver, and other precious metals are all in buoyant mood. And whilst there are other issues to contend with, it does look as if governments and central banks are working together to some degree, or at least adopting very similar measures. Now, over on our Richard and Greg channel, we have published an update which was recorded last night and published then this morning. And please do stay tuned, as we plan on producing quite a few videos over the coming days. Hopefully, positive ones for us all to share. In the meantime, please do not forget to subscribe to this channel and press the bell sign so that you are notified of future videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.